Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we're heading into more economic confusion. The lack of conviction we noted yesterday when equity markets rose is in evidence today. In early afternoon trade, the S&P 500 is down a very sharp 4.6% and falling. And that wipes out almost all of yesterday's unusual 5% rise. It means the March decline is now 6.8% and the overall 2020 fall is 15%. From the February 19 peak, we're down almost 19%. And the WHO has officially declared COVID-19 a pandemic. The latest compilation of COVID-19 data is out. The global tally is now 121,600 of officially confirmed cases, up 3,000 from what we reported just last night. But a pandemic declaration will mean tighter global travel and trade restrictions. And it will upend economies, ours included. Pressure will come in many forms, but one big financial one will be the stability of the financial system. Yesterday, the New York Fed engaged in more than $95 billion in overnight repo activity with US Treasuries, an all-time high. But at the same time, they purchased another $28 billion in mortgage-backed securities. All up, that is more liquidity support in one day than we've ever seen. Sure, some of this, perhaps the majority, is rolled over, so isn't new, but at this level, a frighteningly large amount is. The Fed may seem calm above the water, but in the engine room, the motors are screaming. In China, bank lending growth slumped in February, growing at about half the level expected, and those expectations included large reductions. But at least it grew. It seemed to be more of a demand pullback than an unwillingness of banks to lend. Further, the quality of the lending that is being done is likely to be very poor, supporting struggling businesses' day-to-day needs rather than financing expansion. One aspect that is very noticeable worldwide is the lack of major official stimulus announcements to counteract the virus emergency. Canada said it would provide $1 billion in support, and the US has already announced $8 billion, but none of this will touch the size of the actual economic problem. The UK is currently announcing major stimulus, but that's more Brexit related. Australia is reported to be readying a $17 billion program, however. It is reasonable now to expect most countries to ramp up such fiscal support over the coming days. But until the virus caseloads start to level off or fall, consumer sentiment will keep much of it from being fully effective. There will be winners and losers from such stimulus programs as each is announced, and that will distort market activity. The US Treasury 10-year yield is now at 0.76%, up from yesterday, but still very low. Gold is lower again today, down $7 to $1,648 an ounce. And US oil prices are still very low and have dipped from yesterday's small rise, down $1 to just under $33 a barrel. And the Brent benchmark is just over $36 a barrel. And the Kiwi dollar will start today up 0.5 cent to 63 US cents. On the cross rates, we're up to 96.7 Australian cents, and against the euro rising as well, now at 55.9 euro cents. That means our trade-weighted index is now back up to 68.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.